London-listed Emmerson PLC, the Moroccan-focused potash development company, has said it's completed the preliminary design and cost estimates for the mine access component of the scoping study at its 100% owned Kemissat Potash project. Hayden Locke is Chief Executive. He joins us now with some more. Stock up 3% today. Why is this important?
Well, this is the first part of the scoping study that we're looking to deliver in Q1 of 2019, and it really starts to paint the picture of the claim that we've been making in the market that Kemissat has the potential to be a low capital cost potash project. That's an extremely rare thing in the potash industry, but if you have a look at the detail from the announcement that we put out today, it really shows the first key capital component of any mine development is getting from the surface down to where you're actually going to mine the potash mineral. Compared to the rest of the peers in the potash space, the vast majority of them, we are saving a huge amount of capital. And I guess one of the things that we pulled out of the announcement was the average Canadian cost to get from the surface down to that potash horizon is about $1 billion. Our announcement today suggests that it'll be around $35 million, including a 30% contingency, which represents a 95% cost saving against a Canadian peer. So really starts to paint that picture of why we believe this has the potential to be a low capital cost project. So
just to confirm, the comparisons you got on this chart we're going to show now show that the other comparisons are at the same point, are they, along the period of the project development?
Exactly right. It's the capital cost estimates for the exact same capital component of this project, which is going from the surface down to the underground mining horizon. It's just one small part of a overall potash project, but as you see in the slide that we've put up, BHP spent over $2 billion sinking their shafts in Saskatchewan. We've got a number of other examples that show just how costly it is for these other projects relative to our project.
Tell us a little bit more about the design, because I think this is something that's come out of the scoping study, isn't it? The way in which you're able to keep the cost down is a new and a different way of approaching this particular mine.
Yeah, it's not new, but it is very different for potash projects, and the reason we're able to approach it this way is the geology is much simpler at our project. So we lack an aquifer, which is a big water unit that sits above most potash basins in the world, and what that means is we can access the mineralisation via a decline rather than a shaft. The shafts in Canada in particular have huge levels of technical complexity. They have to go through a ground freezing process. The lack of aquifer at Kemissat means that we just sink a normal tunnel. Still a technically challenging thing to do, but on a relative scale it's a much simpler task and much cheaper, as you see from our estimates that our independent consultants put out.
So the engineering work has begun, that's right, is it? And how much more has got to be done before we get to that next stage?
That's right. This is a development stage potash project. We commenced the scoping study to assess the high-level technical viability of the project and the economic viability of the project in June. We're targeting completion, or we announced that we were targeting completion in Q1 of next year, 2019. It's progressing extremely well, and we're very confident it'll be the front end of Q1 2019. In between now and then, we will be delivering, as we have done for this discrete piece of work, we will be delivering other discrete pieces of work that show the technical work that's being done, but also capital cost estimates and comparisons against other projects that really go to support our claim that this has the potential to be a low capital cost potash development.
The $35 million that you announced today is only, of course, part of the total cost that will have to be incurred before you get to the mining stage. With the work already begun, I know that you raised some 6 million, I think it was, sterling, I believe, when you launched on the main market back in June this year. How much of that money have you got left, and when do you envisage the point at which you then got to start looking at raising the balance?
We still have around £4 million left after all of the transaction costs and some initial spending. We have a fairly intense work program over the next 12 months, including some drilling which will commence in the coming weeks. The scoping study will take up a proportion of that. Additionally, metallurgical test work in the early part of next year once that drilling is complete. We really don't need to look at raising any more money until at least the end of next year, possibly a little bit further than that. So we're in a great position to really tick off these de-risking milestones.
Okay, well, let's take a look at the milestones you're now likely to incur over the next 6, 8, 10, 12 months or so. What are you expecting to be able to deliver to investors to show that you're on target?
So the following pieces of news flow coming out of the scoping study will be things like connections to infrastructure, connections to the roads to get us to the ports, connections to electrical power infrastructure, the ports themselves. One of the things the underground mine access is one small portion of the area that we can make a big cost saving relative to most of our peers. The other big saving area that we have is the infrastructure area of the project. So we'll be focusing a lot on our access to that infrastructure and how that plays into our scoping study estimate. Those will be delivered on a sort of fortnightly or maybe 3-weekly basis over the next 3 to 4 months. We'll commence drilling, and we'll be putting out drilling announcements on that, leading up to the delivery of a scoping study, which will really allow investors to interrogate the technical assumptions that we've made, but also have a look at the economics and the size of the prize that we're playing for with this project.
Okay, looking forward to that. Hayden and Amelia, thanks indeed for joining us with an update on that Capex project, the 100% owned potash project in Morocco. That was Hayden Locke, the Chief Executive of Emmerson PLC. Subscribe to IG for educational content, company insight, financial analysis and expert commentary.